Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitment of Traders review. Today we're going to have a look at the 42nd report of this year, and as usual we're going to start off with the changes in commercials position. So here we go. As you can see, we've got wheat, the Chicago wheat on top of our list with a 40% change in commercials positions. We've got roughly the same change size in large speculators, 36. The changes are larger than average. Nothing too unusual. Of course, this is a bearish COT change signal coming maybe a little bit late. You can see there was a bit of a decline in the end of last week, or well, basically during the whole week last week. So who knows if this is going to continue in the next couple of days. Opening a 5-year chart, you can see how extreme this market is. We're moving away from a bullish COT extreme. You can see that prices have gone higher. We had this bullish extreme in the market for quite some time without any reasonable reaction from price. Who knows, maybe this was it. We've reached the bottom and we may be talking about a change in the trend. Of course, that would be more obvious if we would have higher prices. That would be a more concrete situation. Moving on to the New Zealand dollar, where we have a 33% change in commercials position. 41 in large speculators. You can see basically commercials moving from net long territory to net short territory, and large speculators, well, I believe they're still underneath the zero line. So basically it's small speculators taking the bullish side of the market right now. This is of course again a bearish COT change signal, and here you can see it was only Friday when we saw a bit of a decline in the New Zealand dollar, but the whole week was actually a very bullish picture in the New Zealand dollar. Moving on to the 5-year chart, you can see that we are more or less in between the two extremes. The last major COT extreme was a bullish one back over here in mid-2015, and we had to wait a couple of reports before the price started to go higher. So right now we see that this bullish COT extreme signal back from 2015 is still in place, and we still got a lot of space left to reach those bearish extreme levels that could signal the end of the rally. And moving on to Oats, where we have Oats 25% change in commercials positions. You can see that we're the change size is not. It is actually pretty visible. I'm sorry, there was a problem with the chart over there. So this is the Oats market, and this is the 25% change that we have in commercials. And here we have the 16% change in large speculators. This is a bearish COT change signal, no question about that. But look at the chart. This is a very dynamic movement in the Oats. So I think we should be pretty cautious with any bearish moves. Trades that we want to take. Moving on to the 5-year chart, again, I think we can state that we're more or less in between the two extremes, so there's not really an extreme to talk about. It is of course relatively bearish if we take, let's say, a half-a-year interval, 1 year, but on this 5 years chart you can see that a bullish extreme would be happening if we'd reach, well, roughly 2,000 contracts net long level in case of commercials, and bearish if we would have above 5,000-6,000 contracts. That would be a more visible and clear bearish COT extreme signal. So no extremes right now to talk about. The last one was actually more bullish. I believe we can state that the fact that commercials were net long was a bullish signal, and you can see how well that pushed prices higher. Moving on to large speculator COT extreme, we've got NASDAQ on top of a list with an all-time COT extreme in large speculators position. So here we go. You can see this on the chart right here, and of course you can also see commercials being at a very extreme place in time. So I think there's not much to add to this. I think it's a very clear bearish picture that the COT report tells us. Of course, you may have had such experiences in the past that these large bearish COT extremes did not really affect indexes, because maybe not COT extremes are maybe not that effective in indexes, but nevertheless it does show a stress level in indexes which is really high at the moment, and that definitely supports a more bearish picture right now. Moving on to natural gas, we have a 485 report extreme in large speculators and a 489 report extreme in commercials. What's interesting to see is we've got both commercials and large speculators net short, and it's only small speculators who are bullish about the market. That in itself is, I believe, a bearish signal. But of course, the COT Extreme itself is definitely quite obvious. And I'm just showing you a couple of places in time. Maybe it's not that clear here. You can see that there was a very steep rally after which natural gas fell. And I think we have reached a very strong bearish COT Extreme level where we can expect this rally to end. Moving on to the Kansas City wheat, we have a 64 report extreme over there, not that large, but nevertheless it's still significant. You can see on the chart that it's been quite some time, more than a year, that we had such levels. On the other hand, don't forget that we had a bullish COT Extreme in the market, and we're moving away from that level. What's interesting to see, we didn't really have a significant reaction from price, and we're still getting a more bearish extreme right now. So pretty interesting picture here. I believe it's important to take the correlation between these wheat markets, the Chicago and the Kansas City wheat, into consideration when you decide what to do with this signal right now. Nevertheless, it's definitely a bearish COT Extreme signal, and we may see a bit of a decline happening in the next couple of weeks, month maybe, or the continuation of the decline. If you have to see that there's a strong correlation, an obvious strong correlation between the Chicago and the Kansas City wheat. So I just advise you to analyze both markets. Okay, that is going to be all for this review. Don't forget that we have a page called COT Charts where you can look at all markets for free, and but of course the COT analysis page will give you a more in-depth and detailed COT analysis. So I hope you enjoyed this review, and I hope to see you next week. Have a great weekend. Take care. Goodbye.